Hi everyone, welcome to today's Zoom training. So today we'll be looking at support and resistance. Then we'll talk about supply and demand zone. Then we'll look at some concepts of the new strategy. So after this, by tomorrow, I will bring out the new strategy. So whatever we're going to learn today, just go through it, practice it, then I'll wait till tomorrow when I'll bring out the new strategy for us. So support and resistance, let's start from there. So the support refers to prices on a chart that tend to act as a floor by preventing the price of an asset from being pushed downward. So when you have a price on your chart and you have a price move up, then it moved down. Let me remove this. So you have a price, you have on your chart, you have price. Oh no. So as you can see, price is moving, but when it gets to this point, it gets reversed. So this is what we call the support zone. So it's the position acts as a floor. When price gets to, it prevents price from moving to the downside. Any point you have on the chart like this is a support. And if you also have a point at the top acting as a roof, the price is not able to break above it, that area is a resistance. So that is just the brief explanation of support and resistance. So the ability to identify a level of support can also coincide with a buying opportunity. So once you are able to identify a support area like this, then this will give you a buying opportunity. If you buy from here, you make profit. You buy from here, you make profit. So the same thing applies to resistance. So if you have the ability to identify resistance level, it's an opportunity for you to sell in the market. And when you sell at those points, you'll be able to make profits. So we'll go to the charts and look at some of the support and resistance area. But before we do that, I'll also talk about the, okay, let me just finish with the support and resistance before moving to the supply and demand zone. So what I will do now, I will want us to go to the chart so that we can look at some of the support and resistance areas we have in order for us to be able to identify them. Okay, let me load which of the chart am I going to do now? All right, so if you look at this chart, you will have some areas like here. Look at this point. Like this area. Look at this area. So you see, when price get to this point, it got rejected. As soon as price got to this point, it got rejected. So price could not penetrate through this area. This area is what we are referring to as a resistance. This place is resistance. Then look at here too. We have here, this is support, and the top here is resistance. As you can see, 3 times price hits this area but could not penetrate through it. That is a resistance area. We also have this place, resistance, support. So this is another support area. So why we say there are opportunity for you to sell on a resistance and buy on a support zone. Look at here now. Price dropped from this level, went back, but could not penetrate through this and came back to this level. So on getting back to this area, you can look for a candlestick pattern that will give you an entry for a sell, and you sell down to this level. So it will give you opportunity to sell. So look at price came here but could not penetrate, and see this is a pin bar. After this pin bar, you can buy from here. So it will give you an opportunity for you to buy in the market. Support will give you opportunity to buy, while resistance will give you opportunity to sell. So in the chart, we have a lot of them. So if you can study it very well, if you take your time to study it this concept very well, you can use it to make a lot of profits in the market. This is support zone, and this is resistance area. Okay, so that is that. Then let me just quickly go to the supply and demand zone. I'll still share my whiteboard. Okay, so for supply and demand zone, before I forget, you in some cases, support and resistance can be, you can use trend lines, you can use moving averages. So it may not be a flat floor, it could be something like this. Where you will see price moving up, coming down. When it gets to this point, it will continue up from here. Just like this. So these are dynamic supports. They are not stable. They are not in one straight line like this one. So price will just get to this point, hit it and go up, get to this point and hit it and continue up too. We also use moving averages for our supports. and resistance as well. So on this area now, this will not be um, resistance, while here is support. Your moving averages can be dynamic support and resistance as well. Where you have a particular moving average, when price gets to it, we have a strategy on that. When price gets rejected from the 50, we'll buy, provided that price is above the 200 moving average. So we can use them as support and resistance as well. So on supply and demand, so a supply zone is a point where price is likely to fall, and a demand zone is a point where price is likely to rise. Supply and demand zone form from the banks and other big players, big players buying and selling zone. So areas of supply and demand zone, they are areas where the big banks and the market makers take their trade. Once they take their trade, you will see an impulse move from those areas, either for a buy or for a sell. Those areas, when they sell, those areas becomes a, a supply zone, and when they buy, those areas become the demand zone. So let's go to the chart so that we will look at some of them. So this is a chart. As you can see, price moved swiftly with an impulse from this level. So this place can be referred to as a supply zone. So this is supply zone. So anytime price goes back to that level, there is a tendency that price may fall from that area. So if price get to this zone and drop down, I said there's it. Then we also have this area. So there was an impulse drop from here. And look at what happened. Price goes back to that level and see the result. That is for supply zone. Then areas of demand zone, supply zone appears on the top while the demand zone appears at the bottom. So such areas like this are demand zones. Areas like this, when price get back to them, they go back up. So there is an impulse move from here. So this is supply zone. If you're able to study and master them, you'll be able to use them to trade and be profitable. Once price get to those zones, price will drop. So, but what I want to show us today is there is an indicator that you can use to identify supply and demand zone. I think I have one of them. Let me use this one. So this is it. This is how it looks like. So this is a demand zone. So we expect price as price get back to it. If with a strategy, there's a strategy we can use to enter the trade and buy. This is a demand zone. The one that is marked above is a supply zone. This one has been retexted. That is why it's not showing a fill box. So as you can see, price traded away from it here, and as price got to it here, price started selling. So this is a supply zone. This is the demand zone. That is how it looks like. Let me check other areas. So this is the supply zone. Supply zone. So they are not much here because of the setting, the way I put the setting, but let me see if I can add. For the setting I have there is for a higher time frame. The one for lower time frame. Okay, let me use this. Yes. So you can see them now. This is the 15 minutes supply zone, supply zone, supply zone, supply zone. See where the way price is dropping from those areas. Demand zone, demand zone. This supply zone. Price get tested it here and drop down. This is supply zone. Price tested it here and drop down. Supply zone, supply zone, supply zone, and supply zone. Supply zone. Let me check for a pair where I will get demand uh, demand zones. Yeah, this is demand. This is demand. Price retested this one here. Price traded out of it and retested it and pushed up. This is supply zone. This is a demand. This is another demand zone. Price moved up and retested it, and that was it. So that is the supply and demand zone. Now, talking about some of the concepts I want us to look into, I want us to pay attention to them because we are going to use them while when we'll be trading the strategy. So the first one I want to talk about is an order block. I'll just mark it for you. An order block. So when you see a candle like this one, this is an order block. And the one I want you to use as order block, anyone you see that with these characteristics, these are the ones you will use as order block. When you see this is a bearish order block, a bullish candle. Now, when you see the bullish candle, there should be an engulfing candle, bearish candle. Sorry, this is a bearish order block. There should be an engulfing candle, covering the order block. So it could either be like this, could be one candle engulfing it, or two candles engulfing it. Sometimes it could be more than two. So when you see this, we are going to be using this. This is an engulfing candle, an order block, a bearish order block. There is another type I will show us here that I want us to also take note of. Now, let me show you a bullish order block. This is a bullish order block. As you can see, this red candle is the order block. There is a bullish candle engulfing it. So this is a very valid order block. What is the essence of this order block? When price trade out of it and come back to retest, we can take a trade, we can buy. If price come back to retest this zone, we can sell. I don't know if price got to that level. Let me see. Let me check if price gets to this level in the future. Yeah, price got to it, but it didn't sell. It broke above it. Now, another type of order block that I want us to take note of. There is a situation where we will have two candles engulfing one single candle. We can consider it as an order block. Okay, when I get to that one, no, I need to explain that before I continue. I'm looking for a very good example.
Just last one.
This one?
No, sir. I think you passed it already.
Okay, there is a particular one I want to talk about. But I just saw one other block now, like this. This is another block. As you can see, price traded away from it, retested it and dropped down. Now this, where is the one I just saw now? I saw one that I want to talk about. Where is this candle now? Okay, look at this. Look at this one. Look at this one. So you can see this is the other block, but the first candle could not engulf it. Even the second one did not engulf it. It is the third candle, the combination of these three, that were able to engulf this candle. So when you see a candle like this, and you have three bearish candles in the same line engulfing it, you can consider it. It could be three, it could be two, but I think we should just stick to three. If it's more than three covering that same candle, it's too much. So me, if I would prefer to pick the ones that only two candles are covering. So you can consider this as a valid order block. If it is more than this, don't consider it as a valid order block. And if you look at that order block, see what happened here. Price retested it here and dropped down from it. This is an order block. There is another order block I want to talk about, is the hidden block, like this one. Take note of these three blocks, like this one. Look at what happened. It's hidden, it's sandwiched between two bullish candles. So this is an order block as well. See what happened. Price retested it and moved away from it. So those three aspects I want you to take, I want to take note of them. This type, the single type, this hidden type. Then the next thing I want to talk about is the fair value gap. The fair value gap. You can as well see this type of order block where you have two bullish candles in this form. There's a wick here and there's a wick here, and this one moved on. If you go to a lower time frame, you will see this kind of candle in between them. So you can consider that as a hidden block. So the fair value gap. So the fair value gap is when you see a bullish, a combination of bullish candles. So we have these candles moving on, bullish candles, but this place was not covered. There's a gap in between them. Unlike every other places where you see candles, there's a mixture of both bullish and bearish candle. But at this point, there is no candle, no bearish candle covering this space. Once in Forex, there is no space is not allowed. So we have buying and selling, buying and selling. Even in a single candle, we have buying and selling. So when you have a space like this is a fair value gap. Some people call it imbalance. And this is a very important concept too. We'll be using it to take the trades as well. So you can take note of them. Where you have bullish candles going or bearish candle coming down, and you have a space, a big candle that moves up, but there was no other candle beside it. That is the fair value gap. So this is an order block, and a fair value gap was created here, as you can see. No space. This is a fair value gap, but it's in between. Just the ones you consider the ones that have the same color. Take note of those ones. Like here now, this is a fair value gap. Fair value gap. So, and the last one I want to talk about, this is an order block, is sandwiched between two candles with an engulfing pattern. The last one I want to talk about is the railroad track. we'll be using them to trade this strategy. Railroad track. There are two candles of the same length but different colors. We usually find them at the support or resistance level. So we'll also be using them for trading as well. I mentioned it in the last training. So two candles, they are equal in body but different colors. So this is a railroad track. These two candles, bullish and bearish candle together. So you take note of them as well. So they must be equal, irrespective of the wick. The body of the candles must be equal. We'll be using them for this trading concept strategy that will be bringing up tomorrow. So those are the major things I want us to know before we go into using learning the strategy. So by tomorrow, the same time, 8 p.m. GMT plus 1, we'll be looking at that. So please watch this video carefully, study the concept, and please comment, like, and subscribe to the YouTube channel as well. Click on the notification bell so that you'll be informed when we upload new videos. So we have a free Telegram group on the channel. Please do well to join it. We'll have some trainings and videos, templates, and strategies that will be maybe beneficial to you when you join the group. It's free, but we also have a VIP paid group that you can also join as well. So, all right. So let's have a nice day and trade responsibly. Thank you for joining the Zoom.